I think it's important to listen to new music because it keeps your synapses in your brain, firing. So that's what I try to do. Hey, everybody, welcome in. It is Sweet Bobby. This is the Trader Nerds, and real traders never trade alone. They trade with their fellow nerds like Babe Ruthless and Ben and Dan and DB and Don and Godwin and Hal and Jason and John and Lee and Mike and Mikey and Mo and Stacy and Steven and Todd and Tyler and Vicky with a Y and Jim B. Hey, everybody. Good to see you. Well, let's see. It is Fed Day, and Jay Powell will come out at 2 o'clock and tell us that he's going to cut 50 basis points. That's my guess. 50 basis points, or are y'all thinking it's going to be 25 basis points? So we'll see what it is, one or the other. And the market is just marking time until that announcement comes. So really nothing to happen here today. This is just, we're just waiting until Jay Powell. The big alligator has opened its mouth as the AD has gone back up. AD is now positive. Its AD is 9. The VIX, though, look at this. VIX is swole up a little bit. It's at 18.77. And volume looks a little bit light today. I think at 2 o'clock we'll see the volume increase. Let's see what the Big Green Monster says. Big Green Monster says we are at the point of control. If you've ever wanted to know what this red line is, this is what we call the point of control. It is where the most volume has traded over the last 10 days, is right here. And so we are right there. And we have a upward target 57.41 that should serve as a little bit of resistance. And also, it may want to fill these little gaps right here. So if it doesn't go up, it's going to go down, but it's really right where it needs to be. Let's look at the linear regression. Linear regression, we are still in the upward, the smaller time frame upward regression that we've drawn here. And otherwise, excuse me, otherwise bullish market that we've been in lately. And of course, we go to the top of the linear regression, we go to the bottom linear regression, we go to the top, we go to the bottom, we go to the top, and now we are headed up. So that's what we're doing with the linear regression. So everything looks really, really good. And I want to tell y'all something, just to be as fully transparent as we can. And I know back testing is a lot of, but I've been trying to back test something, different things to see different ways that we might can sell options premium and be successful at it. But it really is a little bit difficult. And, what we've done now is we've done this thing where we've got the 25 point wide put credit spreads, and we've got everything looking here. But look what this thing looks like right here. Let's just say that we're looking at this. If we're down 4%, and it really doesn't matter what the volatility is on this, it's just going to be down. But let's say volatility doesn't go down at all, or doesn't go up at all. You see that we on these put credit spreads are having severe losses. 4% down is a $19,000 loss. And then we're basically at a max loss at 8 and 12% down. And it doesn't matter because we've got defined risk on these things here. So it's just going down. So that's a lot of risk that we're taking. And see, those numbers don't change when volatility goes up because you are basically at the mercy of the market there. So it doesn't help us. Now, what does help us is while these are losing 24,000, the our ES positions here the majority of them are making 56,000, and these three puts here are losing 23,000, and the net result is we're going to lose, or we're going to make $8,200 on a 20% crash. The issue is you start having big losses on 4%, 8% down. Let's move that back down because we don't see those volatility numbers going up. You start having pretty oversized losses, and for a $75,000 account, and that's just a little bit too much. So I don't know. I don't think these put credit spreads are the way, and we're trying a lot of different things. I know we could do the Rick trade. If Rick is here today, is Rick here? Rick's not here. We could do a 1-day Rick trade, but the more that I'm thinking about it, the more that I think I'm going to settle on something like this. I think I'm going to settle on, and y'all are probably laughing at me because you go, Bobby changes his mind every other day, and that basically is true. But here's what I'm thinking about. I'm thinking about good old fashioned buy and hold with a hedge, but do the buy and hold in a different kind of way. So, we always say, or Tom King says, and others agree with him, whoever dies with the most SPY wins. So you could do a buy and hold with SPY, but what I'm thinking about is implementing AIM, which is Lichello's. Let's see if I can spell it right. Lichello's AIM, which basically tells you to sell when the market goes up, and it tells you to buy when the market goes down. Now, to further, and we've done this before, but with a lot of different things, but what I'm thinking about is doing something like a leveraged ETF. So that we do something like, probably not TQQQ. I want to keep everything in the S&P, but maybe doing UPRO, which is a 3X S&P 500 fund. And what UPRO does is if the market is up 1%, then UPRO is up 3%. If the market's down 1%, then UPRO is down 3%. Now, I've almost thought that I may go a little bit more conservative than that and do the 2X leverage ETF. Does anybody know what that is? What is the 2X leverage ETF for the S&P 500? Let's see what that is. List of leveraged ETFs. Let's find out what the let's find out which one it is. Here we go. Strategies is broad market. Daily objective 2X. Let's see what that is. Here we go. Ultra S&P 500, which would be the SSO, broad market 2X. So we kind of like that. So we could do SSO. Let's put that in. If you wanted to be more conservative, or if you really wanted to be conservative, you could say, hey man, I'm just going to be a SPY buyer. Or you could do the Vanguard ETF that my daughter is in and go VOO. Now, what I like about doing something along this line, I'm thinking maybe I want to be really aggressive and do something on UPro. Maybe I want to do something uh, a little bit on medium side. And this is if you're very conservative. And what I'm thinking about doing, Lichello gives two different ways to do it. If you had $100,000 portfolio, you could put 50%. This is how he initially did it. Put 50% in something like UPro, and then 50% in something like Bill or a cash equivalent, right? So you could do 50% UPro, 50% Bill. And then when UPro goes up, it basically the algorithm will tell you to sell, and when it goes down, it'll tell you to buy. Now let me show you this. Let's see if I can find it here. Let me open this spreadsheet because this is the AIM spreadsheet. And the cool thing is I have fixed this thing. Well, it's still open. What's wrong with it? Data refreshed. Yeah. Show you what it does. It basically tells you what to do in the event of anything. So this one basically, NVIDIA, when we first started buying NVIDIA, it was much higher. And so what happened is NVIDIA has gone down significantly, and it tells you to buy 263 shares. Let's see what happens when we increase this stock price here to like 200. See if it gives us a, let's see if we move this to 200, the price of the stock. Yeah. So that's what happens. It tells you to sell or buy. And if this thing goes down lower, like to 100, it tells you to buy. So the algorithm basically tells you when to buy and when to sell. So this is kind of a cool thing to do. So let's undo that and make sure we've got our little thing. And the good thing about this groovy little spreadsheet is it does all of this itself. It pulls this in from Thinkorswim, and it keeps up with your cash values and tells you basically what to do. So this is kind of good. And if you've ever been to Portfolio Visualizer, let's go to Portfolio Visualizer and just look. If y'all have ever played with Portfolio Visualizer, it's really cool. Let's see. Portfolio Visualizer. Oh, man. Do I have to log in? Okay. Let's log into this thing. Trial expired. I thought this was free. Back test the portfolio. Oh man, I didn't know you had to pay for this. I thought it was free. Was Portfolio Visualizer not?
Bobby,
Yeah. Yeah.
it was free. Earlier this year, they switched from being free to a paid service.
Oh, heck. How much is
You
it?
can still, I don't know, but you can go back 10 years if you figure it out. But they kind of went the AI route and fuse things up a little bit. But there's a new one out there. It's called Testful, TESTFOL.io. And that's how it looks. FOL dot, yeah, testful.io, period.io.
Test oil dot
No, I'm sorry, it's a lot of background. TST test FOL .io.
FOL.
Yeah, like testfolio,
Oh,
but there's a
test
period in
folio
between the yeah. But there's a period between the I and the O.
like that.
Let me see. Yep, it's it's very similar to Portfolio Visualizer, still free. It's a little bit you can't do as much as you're able to do with Portfolio Visualizer, but still get you some good backtesting.
Okay. So let's see here. Let's do see if it'll let me do it. Name. Quarterly rebalance. Ticker. If you did a thing with let's see, UPRO, for example. Now I can't remember when UPRO was in, let's do 80%. And let's do something like Bill. I don't know how long Bill's been out, but let's do 20%. Let's see if this will work. Thanks for telling me this. And now how do you run it?
Backtest, up the blue button backtest.
Oh, this?
Yeah.
And let's just say, I don't know how far back these go, but let's go.
You can go just put 2000 or 1970s, and it'll go back as far as it can test. But the person who made this software, they have different things you can put in there. So it'll simulate it. If you put SPY, it's like / something, it'll actually simulate it as being UPRO. So there's different ways you have to mess with it for a little while. I can maybe make a video on it later, kind of showing you how to do that. But there is ways to simulate like UPRO much further back with how they scripted it. But it's going to take a little bit of work.
Okay. Let's see
If you
what this
actually go to like, I'm sorry, I'm at work right now. Go to add preset. Go up a little bit.
add
You see,
preset.
yeah, click that real quick, and then hit HFEA. That's a hedge fundy, excellent venture that we used to run. And see how they do that SPY TR question mark L equals 3.
Mhm.
That's like their leveraged version of UPRO that you can test back. I mean, I think all the way to like 1970 or 80. So
Oh, good. Yeah.
that'll give you kind of a way to back test UPRO further out, which gets you close enough for I think what we're doing or what you're doing. And same thing with TLT. You can't test TMF much past like I think 2010 or so. But using that formula right there, you can test back TLT, which is a 3x leverage version of it. So I'll let you get back to it.
That's very cool. Okay. Interesting. So this is something that we could potentially do. The CAGR is 27%. Max drawdown, though, here's the thing, y'all. You got to be in this for the long term. 63%. So what I'm basing, but keep in mind, we have a hedge. So the hedge should work during these, 2020 events like this. But I think something like this might be what I'm leaning toward, just basically a buy and hold. But I think I would do it probably, depends on how aggressive I want to be. And, UPRO and or the other one that we talked about, the 2X. It's kind of where I'm leaning at the moment. So I'm going back through and I'm going to reread Lichello's book and see if I'm just a buy and holder and if I'm going to accumulate shares of this. But I think the prudent thing would wait until we have a nice down day, right? Have a really nice down day and some type of correction before we go in. So in the meantime, I think I'm going to keep my little. I may do some more of these, but I'm really not digging the amount of risk that we're taking here. They're taking $25,000 worth of risk on a 7-day basis. That is a lot of risk. And I know we're up 59 0.6% now. And I don't think that the Fed thing today is going to really make us go down, significantly, if at all, and it very well may be up. But I don't think we're in an area where these strikes are going to be breached. The 542, we're at 563 now. So I think I'm perfectly happy to let these expire on Friday, or maybe we take it off. But I think that we can do something really nice, with the $559,000 that we have left over after the debacle of doing something like that is maybe an accumulation. And so you guys can follow along with this as well, and with this spreadsheet. So let me make sure that I've cleaned the spreadsheet up. Let me double check the values on this thing and get everybody ready for this spreadsheet. But basically we'll keep up with the net lick on the account. AIM dashboard keeps up with all of our, how much we are in cash, how much we are in our different stocks. AIM activity is where we go in and actually buy shares, right? We actually buy shares. And it matters if it's new capital, or if you're making a withdrawal, rebalancing, or if it's a new underlying, then you hit yes there. Quarterly rebalancing basically tells you what to do at the end of every quarter to get everything back in line. If you wanted to do 40% of AMD and 40% of this, it would tell me to sell 32 shares and buy 273 shares. But I think what we'll do is probably do this monthly. Look at this monthly, and it'll tell us how many shares to buy or sell, and keeps up with your cost basis and all of that. SPY net lick. This is basically keeping up with SPY if you were doing SPY. So it compares how we're doing in our portfolio to a portfolio that has 100% SPY in it, which is kind of cool. I love that a lot. And let's see, so SPY activity, you would, on the first day of this, that we started this, you would go in here and basically buy 100% in SPY into, so you basically compared your SPY net lick compared with your AIM net lick, and seeing which one is doing better. And we can do that like once a month. I just think that's really good, especially with a hedge. I think with a hedge really, really looks good. I wonder if this thing would show us if we did something like UPRO. Let's see if it will. Let's close this and let us go trade. Let's do something like if we did UPRO. And let's see if we did a trade like we were going to buy, and let's say 100 shares. Let's see what this looks like. Let's now go to positions. Let's go to count requirement, take off order legs and put in order legs. What is that? Oh, here. There we go. Now let's put in order legs. Yeah, okay. So this is kind of cool. Let's see, if we had UPRO and we bought 100 shares, it does do it. Okay, I'm really impressed by this. So it would show you the amount that we would lose if we went down, and that's with 100 shares, right? If we went down 20% there, we'd still have our hedge. Let's see what amounts in this account so we can get our thing right. Let's see, our net lick in this account is 76,443. So let's go 76,443 divided by, 2 to get, if we were going to do 50%. Then that's 38,221 divided by 81.46. That would be buying 469 shares of that. let's go back and do that now. Let's do 469 shares. And let's see how good our little thing does over here now. Let's go look at this. 469. Let's positions, update positions, and order legs. Oh, now is it not doing it? Well, that's weird. It did it a while ago. Let's do it. Let's see if we can close this and do it again. So let's go positions. Let's go to count requirement. Let's go here. And I swear I saw it a while ago, y'all, didn't it? And now it's not adding my order legs. Let's do out order legs. Let's do with order legs. Crap.
So maybe you need to refresh that order. Trade order.
Refresh this.
No, the actual order itself.
Oh,
The
okay. Let's
Pro
see.
order.
Yeah, I bet so. Let's go and find my order. 469. Let's do that. Let's say we were doing 469. 469. And now let's see. Yeah, maybe that's the case. Come here, little fella. Because this would get us capital appreciation in most months. Okay, now let's see if we'll let order legs. There it is. Good, 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 good. Okay, now this is really, really cool. Is that it shows us now? I'm going to go back and double check the math on this to make sure that that's right. But a 20% down move in the SPY, we will still be hedged to the downside. See, that's kind of cool. I like that. So let's do it without SPY. Let's pretend we don't have our SPY things here. Oh yeah, look at that. We've still got $25,000 worth of hedging power. So let's see if that would be 459 shares. And what was the price of this thing again? Let's just do it together while we're here. Bill or UPRO is 81.45. 81.45. Does it show us what the price of UPRO would be down at a 20% drop? Let's see. Price.
65.15.
Where do you see that, Hal?
Right above, right there.
65.15. There it is, 65.15. So 81.45 minus 65.15 equals 16.3 divided by 81.43. Where we're at now. Let's see, that is a 20% drop in UPRO. Now, that's the issue, is that this thing would actually, could have to do the price down even farther, because this basically shows a 20% down in UPRO, but actually UPRO would be down 60%. You see what I'm saying? So rather than this being 7,000, it would probably be 21,000 down. But still, look at this, y'all. That's the beauty of it. If we had a 60% down, we would still be up $4,000 on that. Now that's kind of cool. I like that. I like that a lot. Because, people are basically saying, oh, it's too dangerous to hold leverage ETFs. It's got volatility decay on it. It's something that you can't hold. But if we did it in a way where we had our hedges, this might be a viable strategy. Might be really, really cool strategy. But I would rather start it on a day when we have a really nice correction, like down 2%, which would be down 6%, and then start it. Now, also, we could do it a little more aggressive. If you'll read Lichello's book, you could do 80% there. Let's see. Hey, Bobby, do you or anyone here have the AIM investment spreadsheet for Google Sheets they would share? I can upload it and share this. Did you get a chance to read the rolling diagonal strategy yesterday? Tyler, I did, but I don't know if it was just me on the day or whatever, but I was sitting there going, my mind was like, waka, 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 waka. It was, my mind was mush yesterday when I was reading it. I did read it, and I will reread it again and try to go through it and make sure that I understand it. And I appreciate you sharing that. I really do. But this is kind of interesting. This is kind of interesting to us to sit there and go, oh, well, here's what we could do. We could figure out if this was 60% down on the UPRO. Let's say this. Can't we do this? I thought we could override that. Maybe 20s as much as it goes. Let's say here we go. Beta weighted. What does that do? Ah, there it is. There it is. That's more like it. That would be a 64.5% down. Yeah, that's it. And look, we're still hedged. Oh, that's neat. Beta weighted uncorrelated. Let's see what that does. That goes back to the thing, doesn't it? So beta weighted is the way to do it here. Do it beta weighted, then this thing is down 24,000, but we're still up 8,000. Now that is very good, because what you would be doing is while we're down 60% in UPRO, you know what this thing's going to be doing? Your spreadsheet is going to be saying, buy, baby, buy. Right? You're going to be over here on the dashboard, and this thing's going to say buy a lot of shares. And you'll be buying those shares when it's really, really, really low. So this is really good, y'all. I think this is good, because I basically yesterday, and with all due respect, I'm going to read Tyler's thing again. Yeah, you could sell covered calls on UPRO 2 to help juice the income. You could do that. You certainly could, to juice the income on it. So this seems really exciting to me. So let's get back to it and think what we're going to do. So we're going to be buyer and holders. Now, if you're here and this is your mama's account and your mama's 70 years old, then maybe you want to do something like SPY or VOO, right? You want to do something that's saying, I'm just going to be an asset accumulator. If you want to be a little more aggressive, you could do the SSO, which has 2x leverage. And if you really wanted to be aggressive, you could do the triple UPRO. But I would think we would probably go to old Lichello and do 50% of an asset and 50% in bill. I think that's what we would do. And then just let this thing do every month, figure out how many shares to buy and hold, because, you know, this is a strong hedge. This is a strong hedge. Now you got to keep your hedge going, but think about the returns you could get on a triple leverage product. Be really, really good. So I'm kind of excited about that. And I really do like, I mean, this test folio thing is okay, but I may go back in and let's see, figure out how to do this. And I may actually pay for this so we can see what that looks like. Bobby's ultimate portfolio. Okay, what is it? Create portfolio. It's not doing it. It would let me download it, but it's not going to show it, is it? Yeah. All right, guys. I'm very excited about this, though. I think the more that I play with options, the more I go, I don't think we can eliminate the risk, even though we've got the hedge. And I know what y'all are saying to me on YouTube is Tony says you got to risk it to make the biscuit. I realize that. You got to risk it to make the biscuit. Was someone going to say something? John, what were you going to say?
Yeah, Bob, I'm just a little bit stuck on the allocation piece. Just say you do bill in one of the two leveraged ETFs. you've got to also include in that percent allocation, don't you, for your hedge? Don't you have to have funds for your hedge because of your BP requirements?
Yeah, we'd have to do that. So I'm thinking that with the way that they do bill though against everything else, that we might not really have to worry about it that much. But you're exactly right. We would have to figure out some way. So part of our cash equivalents would have to be our hedge. You're exactly right.
Okay.
Yeah, yes, that's a good point.
I mean, right now, whether we're, and it's always the individual's prerogative, but whether you're currently holding bill at 40% or 50% or whatever your tolerance level is, just to put that excess cash to use, you've kind of already got that in place, but now you're really saying further subdivide it between the BP you have available for income trading and also the BP you're going to need to do the other part, the leveraged ETF.
Exactly
Yeah.
right.
All right. We'll have to put some numbers on the paper for that one.
Yeah, we got to play with the numbers. And if I was y'all, I would get the book, How to Make $1 Million in the Stock Market Automatically, and let's just see if, I mean, this may be the dumbest thing ever, but I was just sitting there yesterday and I was dumbfounded because I was like, I cannot find any option now other than I'm going to look at Tyler's paper again that he sent me, but I couldn't find anything that would really satisfy my risk parameters. And like I've told you, I don't want to go through what we went through before with the expansion. And did y'all see Raging Bull's video yesterday that was posted in Notional Edge room? Raging Bull basically said, hey, he was the same way. He's like, I can't really find an options program that is profitable. Now, I know the one options program that is profitable, and that's the Sweet Bobby Hedge. I know that's profitable. I have used that. So what if we combine that with some buy and hold? That way you're holding the asset that once it crashes, I mean, look at this. This is great. You sitting there going, man, I lost 24,000 on my UPRO. Man, that's terrible. But then you go, well, I really don't care. Because now I just made $8,300. And what you do is you then convert money from bill back into UPRO after it crashes 60%. So you got to have some stones, y'all, to do this type of trading. But I think this might work. I think this might work. And like Tyler says, if you wanted to juice the income a little bit, you can sell some covered calls on your UPRO. You certainly do that. So I'm saying, why don't we try it? Now, the cool thing is I may could jump in right now because I sit there and go, I don't think we're going to have worse than a 20% correction in the market. So it might be something that we could go ahead and at least get into. But I'd really like to do it after we have a little minor correction. So I think I'm perfectly comfortable staying in my hedges for now and jumping into UPRO at some point. Okay, yeah, let me find the name of the book for you there. Let me show you. This is it. This is Amazon. Yes, Beth. Yeah. Okay. In the stock market automatically. Here's the book. $10.99 on Kindle. Look at this. This is an old version. But yeah, I've got it on the Kindle. It's $10.99. Looks like that might be the only way they've got it. There's one here if you wanted to get a paperback of it. But this is a really good book, and it makes a lot of sense. And what I've done is we've got the spreadsheet, and let's just double check it with the pen and paper to make sure that it works as it should. But it looks like it's working here. Tells you when to buy when it goes down, and tells you the amount in cash or in bill. So I think we've got something that's good. So we'll go with that. All right, guys, good session today. Glad we found out. I think we discovered a lot of things today. Looks really good. And I will see y'all tomorrow.